journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to go down memory lane here. Back in the 60s and 70s and 80s, the only way you could trade foreign exchange was through the banking system. In other words, there wasn't a Forex. There was Forex, but it was through the banking system, and you had to have $1 million account in order to trade it. It wasn't until the late 89 or 90, when they started showing it, and then they brought them out on the mercantile around 83, I believe, where you could trade futures and stuff like that, where they were leveraged, but there was a contract. It wasn't against the bank. When you give an order to the bank to buy or sell, they take that order and they basically take the other side of it. The only way they won't do that is that if you happen to be really good and they lay it off to somebody else. But that's how it is. Now, if you notice here, we had this big bottom, 3-drive bottom here in November the 3rd. We've been rallying for a month now. We got Bill Cerubi's going to be with us today. 1 second, and we're going to get him up and running. Hopefully, I'll be able to get to Al, and he'll get everything ready to go here. And we want to listen to what Bill has to say.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, Bill, are you there?
I'm right here.
Yes, Bill, you're on. So please tell us what you're looking at, my friend.
Okay, well, it's the usual opening for Cycles Research. And if you want more information on the markets, it's cyclesresearch.com. If you're interested in Astro, it's BillMeridianAstrology.com, which is a new website. And here's the summary. Higher stock prices into January, but I think there'll be a correction in Q1. Bonds, trading range through December. You'll see it's a good example of what happens when cycles conflict. Gold, I believe, is up through January, followed by a correction into March. Oil, I think, is bottoming. The U.S. dollar is in a December trading range, and I didn't put it in here, but I put something up on LinkedIn. I think it was yesterday that the Bitcoin cycle turns up and runs up all through the month of December. So that's the summary. So Cycles Research, cycles plus seasonality plus relative strength equals profits. And that's where we were at 2 days ago with the S&P cycle. And you notice how well this cycle has been tracking the share price, and it goes up here, it peaks around the middle of the month, which is a little out of sync is what we're going to see with the seasonality. Well, here's the seasonality. This is post-election years and years ending in 5, cycle composite. There have only been 6 of each, but as you can see, the only month that we missed here was November, but December is very strong. It's up over 80% of the time. And the blue line is the expected return, that is the average percentage return, which is 3%. So December's and years ending in 5 that are also post-election years are very strong. That's where we are. All mistakes will be made on being too bearish. Now, this is the sum of the 1, 4, and 10-year cycles into 2025. And I'll just point out we're right over here right now. If you look at this is the 1, 4, and the 10-year cycle up here, and down here we have the summation of those, which shows a peak, as you can see, on December 1st down into the 20th. So I'll resolve all of this in a minute. The most powerful one is the first one that I showed you, which is swinging up into the middle of December. And I just wanted to point this out. This is from the last time I was on. When Mars hits 0 Libra, which it will do about every 1.8 years, that's a downtrend in the market. And it usually manifests after 90 days. So August plus 90 days equals November, and we just had a down November. So I just that's a follow-up from the last time you had me on, which I think was July. And here is the economic cycle. Again, this is a repeat. I had this on earlier in the year. It hasn't changed at all, but there should have been a low at the end of the first half. And I believe since the end of the first half, depending on whose numbers you're listening to, the economy is recovering. So I haven't done this for 2026 or beyond, but I'll be doing that before the end of the year. And here is breadth is oversold. My favorite short-term oscillator is simple. 10 days, advances minus declines as a moving average. And you can see, as of the weekend, it was oversold, which was why I was so bullish. And there are percent of stocks within the S&P 500 outperforming the overall index. In other words, this is the percentage of the stocks, which is running around a quarter, 26%, that are in the index, which are outperforming the index, which means 74% of the stocks are not outperforming, which makes it very hard on big funds, especially the one I used to work for, because they have these rules about minimum weightings you have to have in every stock. So this is what pulls performance down. And the reason that 2 out of 3 funds have underperformed the market over the last 8 years, I'm getting tired of repeating myself about this, but you can see in an up market here, You can see a low at 20% here in late 2022. Then early 2024, another low, and here we have a higher low. So this is actually bullish. It's saying that the market, that the stock, the constituents that make up the S&P 500, only a quarter of them are outperforming. This suggests more of them are going to join into the outperformance. Now, one of the stocks I have bought here, and I think I published that in Forbes, but I went through the Magnificent Seven stocks, and I came out with Google as being the winner. Because, first of all, the green line is relative strength. It's the relative strength versus the NASDAQ or the S&P 500, I forget which. But you'll note that rectangle. Now, rectangles are the most reliable of all technical formations. This was actually done in the Financial Analyst Journal of all places, the people with the PhDs. When they found out that rectangles were the most numerous formation, they were the most reliable formation, and they were the most bullish when it was a rectangular low. So here you have weekly, and here you have monthly. You can see underperformance from 2021 through 2025, 4 years, and it has broken out to the upside. In the work that I do, I multiply that 4 years by 0.6. This suggests 2.4 years of outperformance from Google. I don't care whether it's overbought, but here monthly, is it as overbought as at its previous peak 2022? No. Let's look over here. Weekly momentum. It has dropped down, but it's curled back up again. And here's the cycle. This is the monthly price cycle that comes from Cycles Research Software. And mine is a bit more specialized. I began working with the cycles in early 1990 with Richard Mogi's software from the Foundation for the Study of Cycles. And you'll note it rises all month. Well, as we saw, December is expected to be a strong month. The money's got to go somewhere. It's like, whoa, here comes the advertisement. Larry's got to sell you some
bills. We'll be right back, Bill. You got the whole half hour coming up, folks. We'll be right back, folks. Bill Cerruti.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Back with Bill Cerubi. Please continue, Bill.
By Google, and I wanted to make a point here. Here is the rectangle down here. Financial Analyst Journal, academics agree with all us old line traders like Larry that rectangles are highly reliable formations. But how would you know where it's going to? How do you know why didn't it break out here? Why did it break out over there? This is how I combine cycles, because the cycle turned up. It's like a guy who's 7 feet tall trying to stand up in a 5-foot room. It broke through the top of the rectangle as timed by the cycle. So this is one of my favorite trading strategies. Find rectangles and then look at cycles like this. And I have internal numbers that show me how reliable this cycle is. So own Google. Now, I was supposed to be on, when was it, yesterday or the day? I don't remember.
Yesterday, Bill. Yeah, I had a little problem yesterday. But
that's okay. Well, the problem's gone. So the MongoDB, that shows a buy on the monthly chart. It shows a buy on the weekly chart. And the same thing, it looks the same for the daily chart. All three bottoming at the same time. They reported earnings. After the close Monday, the stock was up 23%. That's what happens when these cycles aggregate, or there was confluence, daily, weekly, monthly, and the company's reporting earnings. The Value Line Investment Survey, their model, which is the rank stocks 1, 2, 3, 4, 5, has an earnings surprise factor in it. Here's how it works. If the earnings reported are more than one standard deviation away from the gross estimate on the average estimate on Wall Street, they presume it's one standard deviation up, you're going to get a big bounce up in the stock. And if it's one standard deviation, the reported earnings are one standard deviation below the expected earnings, you're going to get a big drop down. Well, here is where I combine cycles with that knowledge that means common sense that stocks get more volatile when the companies report their earnings. But here, the cycles pointed us in the right direction. I bought this stock, I think, on Friday. And so I think it's up another 1 or 2% today. That's 25% in 2 days as opposed to what the big funds do. And that is MongoDB, daily, weekly, monthly, price, momentum, relative strength. You see, this is now up around here. This is up in the 450s or something like that. But the point I wanted to make, it's broken through that downtrend line as preceded by the cycle. And here you have higher lows in momentum, which is one of the key measures. Ian Notley at the Notley Information used to be he taught me this. And the only thing I don't like is the relative strength really hasn't been that great, but it passes the test. It's been rising for 6 months from May through November. It's 6 months. That's the bare minimum. So number one, the cycles pointed out when the stock would break out of a rectangle. Number two, the combination of cycles during earnings reporting time had us on the right side of MongoDB. Now, Microsoft, all I'll say is underweighted. The relative strength has now been falling since late August. That's three. When if it gets to be more than 3 months, start to be concerned. Is it overbought? Yeah, it's more overbought than any time since 2009. Is the weekly momentum hold much promise? No. You see a lower high in momentum and it's headed down. So underweight Microsoft. Now, here's the cycle. Is that a smooth uptrend? No. A trading range to the downside. Avoid Microsoft. Now, here's the sector scan. And surprise, healthcare is number one. Healthcare was last about several months ago. Technology is never far from number one. I have another software tool which measures the changes in rank in these sectors. A bounce up like the one healthcare had is not a harbinger for future gains. After about a month, it returns to underperforming. There was a sharp correction in November. Technology fell. Healthcare, in other words, it was the best of a bad lot. Healthcare was already down, so it didn't suffer that much in relative terms. That's why it's number one. We used to see this at the Value Line Investment Survey with the stock ranking system. So I would not, maybe selected healthcare stocks I'd buy, but I still stick with technology. It's just different names, as you can see. And you're probably wondering about 2026. I'll come back in another show and go more into depth. But the top cycle, that is drawn straight from my software. That's my lead man, so to speak. It only shows strength in Q4. And look at this. Look at that. That's the 1-4 10-year cycle composite that's been so reliable. Again, bottoming just before Q4. What happens in November, Larry? The midterm elections, and few people mention this, but the 15 months from the midterm elections is one of the single most bullish and reliable cycles on record. So this is saying we're going to have a choppy to down first 9 months of the year. And I say to fund managers, why don't you take 9 months off and come back and overweight your portfolios in late September? So let's go. Contrary opinion. Larry, last time I was on, auto's on the brink of the cover of Barron's. So I said, buy the auto stocks. Here's Ford. Here's when I was on the show about here. Is the stock up? Yeah, it's from 11 to about 13.5. Let's update this. Here's a very recent Barron's. This is November. Why NVIDIA will prevail. Brighter days for Europe. Sell signals on NVIDIA in Europe. Kiss of death being on the cover of Barron's. So strong stocks, S&P 100. I won't spend a lot of time on this. This is for if your listeners want to take a long look at this, they can go to your recording, I think, and freeze frame it and print this out or write this down. But AMD number one, Intel number two, Broadcom number three, all chip stocks. And there we see NVIDIA. So a lot of chip stocks up at the top. And we'll see Apple has fallen down. Apple is in the lower ranks. So is Amazon. So there's been a change. The Magnificent Seven are not so magnificent anymore. They've been replaced by other stocks. They're the bearish stocks. And by the way, this is a very good source of short sales. You see Baxter International, Healthcare stock, T-Mobile, Texas Instruments, Mondelez, which is a food stock, Starbucks, Target. So Cycles Research strategy is to look at the technical condition of the price, the seasonality, and the cycle. So that's what we've been doing. Now, here's one of the stocks that I thought would pick up last April when the correction hit and technology got crunched. Fund managers have to put their money somewhere. So I said, based upon the relative strength of the Mag 7, not all the Mag 7 will stay in that group. Other technology stocks will replace it. Well, Larry, look at this relative strength. That's a downtrend, 2015. It's 10 years long and it just broke out. That implies about 6 years of relative outperformance. Look at this, a breakout from ascending triangle, higher lows. This stock has tripled since April. And they make, as you know, hard drives. But the demand for hard drives with what's happening in AI is way up and finally spilled over into their lap. Now, here is the most recent update. That is the cycle, which don't even start thinking of a major high until you get out to April.
Okay, stay tuned, Bill. We're going to have you on for another 12 minutes, so stay tuned. We'll be right back, folks. Bill Meridian.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Bill Meridian, Cycles Research. Please continue, Bill. We got another 15-minute segment here.
Sure. NVIDIA, now this is the very current chart, obviously, and you'll see it really hasn't outperformed by much since August. Last time I was on the show was, in fact, late July. And here I show the price cycle week down through October. So was this is what happens when a very strong stock runs into a down cycle. You get a sideways movement in relative strength. So from the last show, Boeing, I pointed out in July, that Boeing's cycle was topping and I was selling into this rally. Well, here you go. Boeing topped actually in July 29th, August, actually 2 months earlier than the cycle suggested, but it's down and I'm out of it. Now, cycle conflicts equal trading ranges. Here's the US dollar. The dynamic cycle based on the most recent run of the cycle show a strong December, but look at December. It is the weakest of all the 12 months. It is only up 35% of the time for an average loss of about 1%. So what do you do in this case? You mark off the last low, maybe down around here or here, which is 99.5, 99.75, and the last high, which is around 100.25. You're in a trading range. When it gets oversold up against the resistance here, it's going to pull back. When it gets too low down here at the resistance levels, support levels, it's going to rally. That's the best you can do when the cycles conflict. Now, here's another case of that. Here's the 10-year note. and it points straight up through December. But December is maybe the second or third weakest month. It's only up 40% of the time. What will you get? Well, probably a trading range. I estimate that to be between sort of 112.5 and 113.8. And I am currently short it, looking to close that in the next day or two. Oil, one of my favorites. Oil just went through its worst, its Bermuda Triangle, as I call it. This seasonality, there's not much to offset the seasonality. I've tried preconditions and all this sort of stuff. But October and November, over 42 years, very weak. You'll notice December is a little better. Then you'll see this. It goes from that low up to that high in April. So are we moving into a favorable seasonality period? Yes, we sure are. In fact, December 22 to January 2nd, we're up 31 times in 41 years. And here is the current dynamic cycle. It's not updated over the last few days, but it is bottoming here in the first week of December. Here's the seasonality. December breaks this. It's up 50%, 55% of the time in December, but for not much gain. But then it starts increasing into April. And so here's the sentiment. Bearish oil wages rise to the highest on record. Look at this. The hedge funds held record short bets since 2011. This is the high. How far is the price going to fall with this many bears? And the answer to the question is probably around 55, because that is a 50% retracement of the entire range from 2008 down to 2020. So I really doubt it. I'm currently long oil. I'm looking to add to those positions. The next month may be kind of rough. It may bounce up and down, but I doubt it's going below 55. And I think it will be higher by March or April, and I don't care about drilling. Something's going to go wrong, or something. Or the price is going to go up to make all those bullish fundamentals look, bearish fundamentals look silly. Here's the XLE. These are the energy stocks, and you can see usually bottoms in September. It's a little more bullish than the oil price here, and it tops in April. So my thought is sell some of your weaker technology holdings and buy some very cheap energy stocks. There's the cycle for the energy stocks, topping in May, June. So here we have a top in April. Here we have a top in May, June. So I think that's where I'd be looking to add stocks. Now, the gold cycle, that doesn't top until February. Let's look now at the annual cycle of the year. Oops. Here's the annual cycle of the year. And January is a very strong month, February less so, and March the weakest month. So this is topping where? In February. And what does this tell us? That's the weak period. So I would not expect a low from that high that is projected down into March. I wouldn't expect. I think the bears are in control. And here's the breakout from that symmetrical formation. It points up to 45.50 as a high. If you just take the height of that formation and project it up. And here I mentioned Bitcoin. It's much higher than this now. I just did this over the weekend and I threw it in here. But this indicates that Bitcoin's headed up all month. It's been following this cycle. It took some jiggering to get to this point because Bitcoin is only a very short price history. Well, Cycles Research, you can get me at cyclesresearch.com, ranked number one for market timing in 2002 and 2016 by Timer Digest, an independent rating agency. I was ranked number 3 in stock market timing by the same service over 19 years versus 170 services. CR signals, according to them, kept investors 200 to 300 basis points over the S&P 500. And I was an advisor to one of Wall Street's great traders, the late, great Frankie Joe, for a decade, also a fund manager at ADIA. And I can do this for any portfolio. And you can reach me at cyclesresearch@gmail.com. And if you would like, I'm offering a free sample of the most recent run of these cycles on the Dow 30 stocks. That includes a summary sheet of the 30 stocks and one monthly projection for each stock. If you'd like a free copy of that, I'll send you a PDF. Just email cyclesresearch@gmail.com and just put Dow stocks in the heading so I know why you're contacting me.
Okay, we have a question from one of our listeners, Bill.
Yeah.
When you do your cycles, do you consider the planets when you're doing these cycles?
Not these cycles, no. I do that separately. Nope.
Okay. How do they, this is my question, how do they compare between the cycles research and your research? Close?
They're two different things. I use the planets when you get close to earnings time. That is how I, in fact, picked up, that is what directed my attention to MongoDB. And also today, I was long AEO, which is American Eagle Outfitters, which is up 15% right now as we speak. And also, that's a position I already own, so I didn't add to it, but I'm happy that it jumped another 15%. And what's the chip stock? Marvell. They're up, I think, 4 to 5% right now. That was based on how planets are affecting the horoscope set for the date of first trade right now. That's called the earnings surprise method. It's right out of my book, Planetary Stock Trading 4. And the cycles in between I have found to be most effective is the technique I'm using with the cycles.
Okay, very good. Well, listen, thanks for joining us, and I really apologize, and mainly because of Teams, but it was my fault. I had a rough day yesterday, and I was not able to be on the show, so I'll have you on again in a month or so, but thank you for joining us, Bill. It's always good to have you there, and I want to wish you a very, very happy holiday, and be safe over there, okay? It's a jungle.
Okay, no apologies needed. At our age, it's forgivable.
Amen, brother. All right, Bill Meridian, folks. Also, Bill Cerubi. We'll be right back after these few words from our sponsors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Dow Jones. This is our high on the 28th. That was the day we had the largest day where the market was so in other words, the breadth was as worse as it's ever been in 74 years. This was the Bradley date right here. As you can see, we're sitting right at the 70% retracement of that Bradley date. It's not quite a perfect head and shoulders pattern because of the time involved, but you can see we're having this big movement today of 500 points in the Dow. And I think tomorrow we will be down. If not, then I'm going to have to move over to my simulated moving average system. Now, we're making a new high in the S&P on a relative basis, but I don't believe that's going to affect anything on the charts on a longer term basis. All we're doing here is just bouncing up and making another move right here. We're still looking at that 135 pattern that comes in through here. We start getting above 6,900, folks, then it's time for me to reconsider that this is all wrong and we're not going to see a severe correction in the stock market, and it's going to go up forever. And that would be a good thing too, I guess, until we find out when forever happens to be. But we've taken out the highs here of the last few days by just a little bit. You can see that, which we were supposed to do if this is in fact the day we've been looking for. Also, I want to remind ourselves that a few months ago, we were talking about this in the U.S. dollar, that we were going to come down here. And look where we are, folks. We're very close. That means that the pound and the euro should be getting ready to reverse. That was the part of what we were trying to cover on the first part of the show where I couldn't get the technical stuff to work. But that's been sitting there for a long time, and we're not very far away, just like we're looking at the euro very, very close to what we're looking at as a potential high. And that's why we're paying very, very close attention. You can see this euro one more time. There's where we are on the hourly chart. I love you guys. See you tomorrow, and may God bless.